quite a bit. ONGC, 2 index points, Reliance, about 13 now. Sandeep Bhatia is a market master today. He's head of equity India and country head India at Macquarie Group. Sandeep, great to have you with us here. Thank you very much. I mean, if you will, just a quick word on these very sharp cuts in windfall taxes. Because when they were first imposed 6 or 7 months back, there were a lot of doubts whether we'll have to live with these very high cuts and whether very high taxes and whether meaningful cuts will come, even if oil prices fall. But they have come. It's a strong signal, isn't it, that the government is responsive. What's your sense?
I think it's a strong signal that the revenues and the broader economy is doing well, which is why the government is able to be responsive. So I think it broadly essentially means that sensible policy is being followed, but also the context is important, and the context is a booming tax revenue kitty. And therefore, this has happened. I genuinely hope that this is followed always across sectors and across cycles of tax revenues. But yeah, welcome, but also the context of a booming tax kitty is important.
Sandeep, morning. Rima here. How are you reading the markets right now, the setup? We kept saying that Indian markets are far more resilient. They fared so much better than the emerging markets. But now there is talk that China is going to reopen. And at least in the near term, it is going to hog the headlines. It's going to hog the kind of inflows, into the emerging market space. Keeping that in context and the fact that we're not done with rate hikes just yet for global central banks, what's the outlook?
I think the outlook is definitely positive if you take a year kind of view. In the very near term, which is December, Jan, we will face some headwinds because of the fact that there's budget around the corner on 1st Feb. There will be intense speculation from the beginning of Jan about where and what will happen. My own view is that budgets come and go, and the underlying economy is what matters. But yes, I think India will face some kind of headwinds when the world looks at China opening up. But remember, China will be the last to open up. And if you look at what's happening in China, there's been a big spike in cases. Now, of course, the data is not getting collected, so you won't see the data. And even if some data comes in, it will come with maybe a 2-month lag. So it will all not be a real-time kind of assessment of what's happening in China. But China will definitely not be, the opening of China is not a on-off event. It is going to be a process, and that process will be punctuated by the kind of spikes in infection that China is witnessing right now. Remember, China also goes through the Chinese New Year holiday season in February. So it will actually be quite slow for China in the first quarter of the next year. And even then, after that, I think the world has permanently changed its view on China. And to that extent, India is a structural benefit. And therefore, I think India definitely does well for the next year, 2023. But yes, in the near term, December and Jan, it can get a bit difficult.
Right, take that point. Speaking about 2023 itself, what are your thoughts on the sectors that will do well? And I ask this because in the past, Sandeep, you've liked the IT space, and 2022 was particularly brutal for the IT space. In fact, the index is down 25% at a time, and the Nifty is up 5%. So there you have it at an index level itself, a 30% underperformance there. What does one do? I mean, at what point does it get attractive, or do you continue to stay constructive on this space?
Well, I think the IT sector, definitely has bottomed out, and and we've seen some of the performance come back. The real question is whether US goes through a major recession. Right now, the consensus is, as indicated by the Fed and as indicated also by the inflation cooling off in the US and even in India, that we will see rate hikes, but they will not be of the order of magnitude that we have seen all through 2023. So the worst in terms of pressure due to interest rates is definitely behind us. And I would think between April to June, we'll see the interest rates hike stop across both the Fed and in the ECB. So to that extent, I think the IT sector should be primed for performance from the summer of next year. Definitely, we'll see positive index returns as also come through.
Okay. So, as we sort of wrap this year up and look into the next one, Sandeep, any other pockets where you think there is significant value? In the broader market, right, we've seen this rotation one out of the other, and I'm talking about small sectors, which have all rallied significantly. I mean, the last one was PSU banks. We've had large rallies in defense, although that may be a longer kind of theme. They're taking a bit of a break. Then, of course, much smaller sectors in paper, textiles, hotels. What next, Sandeep?
What next is a good question. I think consumer goods, let's wait and see. We have seen ITC rally. ITC, of course, didn't rally because of a broader consumption rebound. It rallied because the pressure of ESG has waned in 2022. That is not mentioned much as a theme, but the big theme was ESG is no longer as big a factor on stocks as it was in 2020 and 2021. So the consumer goods sector has been a big underperformer. It's been an investor favorite for a long time. A lot of people have had to cut weights there, but still it's an expensive sector. And essentially, it's the broader rebound of the Indian economy. We saw the private sector banks do well, then we saw the public sector banks do well. That shows that the entire banking sector eventually has done well. But the consumer sector has to do much better. And that would be indicated if the rural economy comes back. So let's wait and see post-April. If we see the continued growth momentum that we are seeing spread into the rural sector, the consumer discretionary and consumer staples, most importantly, consumer staples should come back.
Sandeep, the FII ownership in PSU banks, namely State Bank of India as well as Bank of Baroda, is still very low at 8 to 10%, while the FII ownership in private sector banks is a lot higher, 35, 40% as well for some of them. Do you think this can provide a big tailwind? And do you think the FIs will go beyond SBI and Bank of Baroda, which are the two big PSU banks? Your thoughts on this sector?
I think PSU banks, I think FIs will continue to stick with the large banks, also well-managed banks such as SBI and BOB. Whether they go beyond this entirely depends upon how strong this rebound is, whether we see this to be a fire kind of rebound on India. I think the jury is still out. We still don't know whether this will go into 2024 to 27, 29. Then, of course, the entire PSU sector bank can perform. Still early days to conclude that. India has not had such a long cycle ever. The longest growth cycle we had was probably from 2004 to 2007-8, 4 to 5 years max. So if we see a similar kind of cycle come through and maybe even longer going forward, definitely the other PSU banks, the other capex-driven plays can come through. That will have to probably wait till 2023 to come to some sort of conclusion how long this rebound is for India.
We take that point. Just hang in there, Sandeep. We are getting some pictures of the finance minister speaking at the FICCI event. Of course, our team's listening into it and will alert us of important comments that she makes out there. But we don't know whether it's you or the finance minister who brings good omen to the market, because it's a stellar recovery that we've seen from the lows. In fact, the Nifty has recovered over 100 points from the lows, currently just about breaking into the green. And, even the mid-cap index has trimmed its losses sharply, opened with a cut of 0.75% and now sitting with a cut of just about 0.25%. What is powering the Nifty ahead? We have Reliance, which is up 1.5%. So with its might, it has taken that index, it supported that index. And giving it company is the banking pack. The banking index actually took support at the 20-day moving average and has bounced right back from there. 43,500 on that index. The 20-day moving average, of course, is just shy of that 43,200 mark. And that's also the low on the Nifty Bank. The Nifty Bank's also broken into the green, courtesy HDFC Bank as well as ICICI Bank, both of them doing extremely well. So good on the markets right now. We'll continue to track it. It has been a stellar recovery from the opening lows. Sandeep, your thoughts on the manufacturing space? I mean, there have been a lot of, production-linked incentive schemes announced. We've seen a lot of chatter around the capex cycle finally reviving. Do you think there are themes that one can play around them? I mean, there's construction companies, there's cement companies, there's manufacturing companies.
So I think the manufacturing and capex revival is happening. It's a slow burn kind of event, meaning it will take 2023 to 25 kind of time period to gain strength. The good thing is that corporate leverage is low. Bank balance sheets are clean. We have the ammunition, we have the powder ready to fund the capex. But the memories of what had happened globally and in India are still very fresh. And therefore, this is something which clearly means that people will be cautious in 2023 in terms of capacity expansion. Yes, I would play that, definitely play the manufacturing sector and CapEx themes. We have liked L&T. We continue to like Siemens. So these are the two names. Also, I think the broader auto sector is also primed for definitely that this kind of longer rebound if the economic growth continues. So that's where we are.
All right, Sandeep. Thank you very much. Great speaking with you. Appreciate you joining in with all of that perspective. The finance minister is speaking at a FICCI event.